This is by far the simplest way for you to learn structure. I'm going to show you on this US dollar Japanese yen pair that it can be applied to any pair, any time frame. And we'll walk through using multiple time frames here step by step so you can see the way you can mark this mechanical structure out. Now, of course, if you're still struggling at the end of this, do check out the 90-day fix program because it does help you even further with market structure, my support, and the link for that is in the description of this video. So first, let's look at the monthly time frame. We can do this across any time frame. It can go all the way down to 1 minute, and I will show you marking this out on a monthly time frame and all the way down to 1 minute, so you can see how quickly this can be done. Now, the first process is understanding how this is applied, and it's understanding that we use a combination of candlesticks on the chart to mark out areas of a break of structure and for valid highs and lows to give you a trading range. Once you have that trading range, it gives you an area for your potential buy and sell zone areas. Then we're going to use multiple time frames to align this and to find potential trade entries. So we're going to look at closest area of price, this area here, and we'll work our way down to where we are on this pair. So when we're looking at the bullish trend in a market, let me just quickly sketch this out for you. When we see the market making a bullish trend like this, and we're looking for the continuation to be bullish, breaking structure, we're going to have this area, let's say, of demand. We're looking for price to pull back into the demand, but you're going to look for an entry to continue to break structure once again. When we're in a bullish trend, we're going to have a sequence of events. We look for valid high and we're looking for a valid low, which gives us that area of demand that we can mark out. And we're also going to look for a valid area for break of structure using these highs and lows. So I'll walk through now quickly on this chart to show you how you identify this using just the candlesticks, nothing else. So on this chart, I can mark off this is a down candle. Okay, it's going to create for me a valid high. Again, I can mark this off as another valid high. As price moves, I can mark this off as a valid low. It's that simple. Let me show you what a valid high and low is. Once we see the close down below previous candle's low, that gives me a valid level I can mark across, and it's a valid break of structure. Now, a valid break of structure must close with a body candle close like you see with this bullish candle. And once we see this candle closing through like this, we can look back for the last time we see, once again, a close down. We see this candle closing down, which gives us a valid low in the market. And that's where you get the sequence of a valid low that can be marked. Now, looking at this area of current price, perhaps drop me a comment below if you can answer this for me. Is this a valid area for a break of structure yet? Just answer yes or no to it. That's all I need to know. I'm not going to tell you. I just want you to tell me if this is yet a valid break of structure. Are we going to continue bearish or bullish from here? So for a valid high, once we see price continue bullish from here, then we see that close down. This is our valid high in the market. So we have a valid trading range. And the trading range is then created from this high all the way down to this low. And that is how you use this sequence of a candle by candle approach, a valid break of structure to create a valid high, a valid low, and your trading range, just using this simple mechanical approach. So if you are struggling with your structures, keep watching. The rest of this video is going to help you to see now how we do this throughout the time frames and bring it all together. So that gives me what I've got on a monthly time frame. Now we can get rid of these arrows because we don't need these on here. So once you have this, what it tells you is your bias in the market, where you're potentially looking for trades, okay, buying or selling. Now I'm going to talk about this in a bit. You're going to leave that comment and let me know what you think on that monthly. But let's look at a weekly. So for a weekly, we can look at where we see this low created, okay? We know this is a monthly low. From this point, we're going to look for a weekly break of structure. Well, this would be a weekly, okay, previous high. And it's a valid break of structure on a weekly. From there, we have a new break of structure right here. So I'm going to start from here because we've got this line in the way. this will be a valid weekly breaker structure. Why is it valid? Okay, because this candle closes through the level. The body candle close. That's the important bit. In a bullish trend, what do we look for? We're looking for a close down. That's our close down. This means this becomes a valid low. Okay, this becomes a valid high when this candle closed down. So our trading range at this point in time would have been right here. So what I'm going to do from this point, let's go back to a actual replay mode from here, and we'll walk through these candles here, showing you exactly what's happening. So at this point, this is your valid high on a weekly, your valid low on a weekly. That's my trading range. Now, once price comes back down to that low, we've just touched it once, okay, and now potentially close through, wait to open the next candle. Okay, so there's the next candle. So we closed through. What that created was a simple shift in structure. Now we've gone bearish. So we're now waiting. When we have a break to downside, we're in a bearish trend. Unlike that bullish trend, we're looking for the close down. Now we're looking for close up. You get the same process for the low and the high. So after we see that valid breaker structure, this is that close up candle, gives me that valid high. Now we're looking for that close up. Let's go forward with a few more candles. Okay, we've not got it yet. See, let's fast forward this a bit. Okay, you can see how price continued bearish. And we may have just closed up there on that candle. If not, this one may well close up, which it does. That means we now have a valid high to a valid low. That's our new trading range currently on the weekly time frame, because we went bearish here. So now we expect price to want to stay bearish, turn back down to run this low. But we go forward with price. Now, at this time, you'd be reading multiple time frames. And if we're looking at a monthly time frame here, I've got no reason at all to be selling on the weekly. This to me is a great buying opportunity down here on this time frame and even a daily to continue higher towards this high. That's just understanding where we are on a monthly. Let's see where we go. We can still see price fall again for the low from here. So this is showing me now, understanding our structure. Okay, this isn't the trading range. This creates what I would class as an internal area on price, created a swing high. So we continue forward with this. And then we had a new low created. So now we just had a potential break of structure to the upside. Let's see if we get a break. And we do. So now we have an internal range. So we have an internal structure range currently from this low, and we haven't created a new high yet. Understanding that our swing is still bearish, but our internal is bullish. Let's go forward price. Looking for a close down. Not got it yet. Not got it yet. Now we have it. That gives me a valid high. So now we have a structure is bullish internally, but we're bearish on that swing. Now, once you see this structure shifting, then you're going to see it running for these lows again down here. Because long term, we're still bearish on that weekly. Let's just see if we do shift back bearish. This is how you can read that structure. So now we have an internal shift back bearish. Okay, we've closed through, a solid candle closed through. This remains my high, is a valid high, and we're looking for a valid low to be created. Okay, as of yet, I don't see one. We may have put one in there, but I'll just have a look. Okay, it was a valid low. As long as we close above, which we did just there, that becomes a valid low. So at this point, the market does make a pullback in here, and then we continue to run lower. And now you're looking for structure to continue, and we know this is a new high. So now you're bearish there, and you're looking for price to run down. This is how you can read this step by step. So as we do this, internally again, because we're still inside this larger swing, a new swing low. So your new trading range on an internal structure becomes here. And that's all you need to understand at this point. We're looking for continuation bearish again, but we just let price run its course here. There's a way we look at multiple time frames, and that's where we now got to current price. So this is showing me a nice push to the upside. Internally, we've shifted out. We are bearish here. Do we have an area of potential supply? And we can mark this down to this area. We've got the imbalance. We've just touched that to the pip, and we've run down towards this low. Now, structure-wise, we're bearish on internal structure on this move down, and we could now look for price to pull back into here for another run lower. And that's how you start to apply multiple time frames, multiple structures as well. So if we now just drop down to a daily time frame and we look at what's happening on the daily, you'll start to be able to understand not only we're inside this range on a monthly, remember this larger range, we're in this range here on the downside on a weekly. Now, we don't need to go that far back for daily. For daily range, we can look at this current price. Now, very often you're going to find the daily or the weekly, internal is going to become that daily range. And we're going to identify we had a nice break of structure there, okay? And that can become our area on a daily. So this can become a daily break of structure. We get a pullback. We get a new daily break of structure there. And you can see how everything starts to align with each other. And then this becomes a new daily high. Now we get a new break of structure bullish at this point. And our new low is here. And you can see price is held at this low and your new high on the daily is here. Now, since then, we can see that price has been bearish. We're looking for a run up into this area of supply where we can still see a push up. We are currently bullish. We've taken this low and we're running back to the upside. Now, if we start applying again in this daily structure, we can start to look for where we see internal structure. Okay, so that's an internal structure break. Right there, we see an internal structure break to the upside. And it's that easy. We start to understand that we're now bullish again. We can even actually look at this is internal. We then have this low here is created. And inside that, we have another internal structure within the internal structure. So you could call this an IIBOS. Okay, so we have IBOS is classed as an internal break structure. That's a bit too advanced for this today. This is showing you how you can read structure quite easily and mechanically. Again, this is that internal. We sweep the low and then we look for the new break to upside. So there's the next internal. So we're bullish, running up for this high, running up for this swing high, and you can start to see everything aligns together this way. Applying the multiple time frame. So when we look at this on a daily, there's a daily range to the downside. We broke out. That's your new daily range to the upside. And we're looking for price to run towards the daily high, towards this area of supply that we have on this larger trading range, which is the internal range on a weekly. So if we just back that off, and I just go up now to a weekly time frame. This is the weekly move down. We're pulling back towards that area. And there's your daily structure reading it. And we can keep doing this all the way down. And I'll show you by quickly now dropping down to 1 minute time frame. Okay, so we know at this moment we're pulling back towards, I can't have this on the chart, potentially let's go back to daily. Where's that level? Let's just mark this out on a lower time frame, or this area here. And we'll mark that out onto below, back to the 1 minute chart.
Before we wrap up, if you're tired of second guessing trades or still wondering why structure isn't clicking, this might help. I built a full 90-day system that turns structure into something you can actually trust, not just theory. It's what helped Danny rebuild after losing nearly 300,000. He didn't just learn structure, he finally knew what to do with it. If that sounds like where you want to get to, the link is in the description. Apply for access when you're ready. And then you should be able to start seeing, we're not getting this, we are, there's the level. That's the level where you're looking for price to run to.
But now we start looking at the 1 minute. Let's look at what's just happened here on the 1 minute. So the price came down. Okay, let's have a look. We had this high, we broke structure. When we broke out, we have, this is a break bullish. Okay, very quickly. Then we have this level. Grab that again. And you can see how this will apply to any single time frame. Okay, so now we're bearish again, looking for close up. There's my close up. And look at where we see the next bullish close here. Okay, so we go from this low all the way up is your trading range. We break up, that becomes a low here. That means that becomes a new break of structure. A new break of structure. Okay, and this becomes a new low. And we break back bearish. This becomes your new high. And that's the thing with a 1 minute time frame. Okay, you can apply this structure, new break of structure again, and then you'll see we have a new bearish break of structure. So currently on a 1 minute, this becomes your current high, and this becomes the current low. That's the mechanical way of marking structure. But look how easily the 1 minute shifts backwards and forwards. That's why you do not want to be sitting there looking at a 1 minute time frame for an entry. You want to be looking at a 1 minute time frame only at the point of entry when you're looking for the use with multiple time frames. So now you understand how we can apply the use of this structure. If you're ready to take the next step, start learning how you can apply 2 time frames to this by watching this next video popping up where we cover the use of 2 time frames with this type of structure.